Welcome to another edition of Chart Talk. I'm Tony Ogorek. I am here with Portfolio Manager Jeff Viksjo. And today, Jeff, we're going to take a look at an inflation chart, which is really cool. It takes a look at monthly inflation numbers by various categories, such as energy, food, etc. So let's take a look at this chart. And what conclusions can we draw from it?
So if you look at the monthly inflation numbers on the bottom, inflation peaked in June. And it's important to see why. This chart does a nice job of showing what was happening in the summer months. And really what we saw was a spike in used vehicle prices. It made almost half of that number. Used vehicle prices were going up because basically there were no new cars available because of the chip shortage, so everyone was buying used cars. That's gone away. That has not been a factor anymore. It's a transitory small blip. And why we're paying attention to inflation is we're wondering what the Fed's going to do. They're looking at inflation numbers saying, do I need to raise interest rates to combat inflation? These temporary blips don't matter. They're not going to raise rates because of that. We care about things that are more longer lasting. If you go to today, inflation has come down a bit, but it's a little concerning on what's driving it. Now it's food and shelter. These are categories where it's not necessarily a temporary blip.
Well, Jeff, the interesting thing is the Fed understands over time that food and energy are highly volatile sectors of the economy. And that's why they've stripped them out and they work with a core number, which doesn't have those. So again, we know energy prices are higher, but they tend to be self-correcting. The answer to high prices is more high prices. That's going to happen. And food, again, depending on what happens with the weather, can impact things. So again, we don't see a convincing picture at this point that we're going to have sustained high levels of inflation, but it warrants watching. And that, of course, is what the Fed's going to be doing over the remainder of the year. Thank you for joining us for this edition of Chart Talk.